Well, hello and welcome and welcome and hello and welcome and welcome and hello and greetings and salutations. Hello and welcome. This is DannyDealz coming at you with Un Poco Mas, the show where we give you just a little bit more. Happy Monday, guys. Today is November 20th, 2023. It's about 12:37 p.m. out here in beautiful sunny Los Angeles. Hope it's a wonderful Monday wherever you guys are. I wanted to come on with you very, very briefly. This is actually going to be probably the shortest video I've ever done, but I just want to show you what's going on, guys. People are freaking out. People are, oh my God, the stock's going down. Something's wrong with the loans. Like the FUD is getting through, guys. I don't think retail is dumping in mass. They are definitely hitting some stop losses. Remember this week, options are not forecasting a major drop in the stock price. The I'm going to buy back at 3, I'm going to buy back at 4, I'm going to buy back at 5 crowd are completely full of shit. The bologna sandwich is out with a downgrade today. That forehead, uh, you got a forehead like a drive-in movie screen and a beak like a parrot, and you just come out and you downgrade the Sofi stock to $4. Um, Now you might say, okay, the stock is sitting under 7. It's not so absurd that these guys are at 3 and 4. Um, but I want to direct you guys' attention to this article in Seeking Alpha today. It's another gift by Stone Fox Capital, November 19, 2023. This really does an excellent job of explaining why EBITDA is a very good metric to judge SoFi by, what EBITDA does include, what it doesn't include. Basically, the big drags on SoFi have been amortization and stock-based compensation. Those are not cash expenses, and those do not grow at a scale as the company scales up. So those are going to continue to be less and less and less over time. And over time, as the company scales, they're not going to affect GAAP net profits. The FUD about the loans, guys, I've read this, I've listened to LaPointe, I've tried to make sense of what the bologna sandwich and the Chia Pet are getting on about. It's just, if you look at it, guys, the bear case, the shorts are always talking about short-term macro dangers. The longs are talking about SoFi specific secular growth. They're taking market share because they've built a better mousetrap. They're a great company with great management who treats their customers right and pays them almost 5% interest when mega banks are still paying 0. That's why they're taking market share, because people like the company, people like the experience. Look at this today, guys. Look at the insanity of these people. After the last ER, which was just outstanding in terms of the growth, they're basically telling you, assuring net profit. This is a good Barron's article, Inside the Loan Valuation Debate Roiling the SoFi Stock. There's a ton of press coming out on SoFi, guys. But today, 38 million shares traded total. Okay. Net borrowed change, and this is not up right up to the instant, guys. This lags, is over 5 million shares, guys. Net borrowing is over 5 million shares on the day. Look at these graphs. Look at the short. It's just inexplicable. These guys have just this is again, go to this article, read the article in Seeking Alpha. You don't have to take my word for it. I'm not making up numbers, guys. SoFi is extremely undervalued. It's worth over $10 right now. It's my price target is 13.75 as soon as they announce that gap net profit. And the stock's going to go up. The article explains why SoFi is going to be a free cash flow machine. Management's telling you the growth is going to come from the technology side. The growth is going to come from financial services. Their margins are going to be incredible. And big banks will not be able to compete because of their legacy costs and because of their legacy models and because they're slow and sluggish. And even better, if big banks want to react, they need to get on board with Galileo. These RFPs are going to pay off. I mean, guys, Citibank just increased their share stake in SoFi. So live short interest again, if you look at just since the ER, guys, shares on loan are up to 123 million. They're up 67% in the last 3 months. It's up 38% in the last month, guys. The short score, which is a measure of everything's up 9% in the last month. Utilization, again, up 37% in the last month. I mean, the shorts have just gone all in after, and they were wrong about the ER. They were wrong. They're gonna have to flip before the actual gap net profit announcement. That's my theory. People are like, what are the chances they're not gonna get the gap net profit? I think it's less than 10%. I think they're cutting costs dramatically to make sure they turn in a good number. And here it is, guys. The bologna sandwich. Giuliano Bologna, he has lowered his price target. From $5 to $4 and maintained his sell rating. I'll have to read a note if he even bothered to put one out. He probably didn't. Like, these guys really never show their work. They're just complete turds. So stake lifted by Nuam LLC. They bought another 8,000 shares. Citigroup increases stock position of shares purchased by Citigroup. Piper Sandler, I'm not totally mad at this. He trimmed from $9 to $8.50. This guy's a really good analyst with Piper Sandler. I've listened to him. I've read his notes. He's just really, really good. He's a smart guy. So I'm not crazy about the $8.50 price target, but remember, that's still a 29% upside from current share levels. So I'm just I'm just not that mad at this guy. Anybody credible, guys, anybody even remotely credible, even the three amigos of FUD, they're between 750, and then the better analysts are 14, anywhere between 10, 12, 14, 15, 16. I mean, if you look at Jeffries, 15, five-star analyst. You look at Citibank, $12, five-star analyst. Dan Dolev not doing so well in these ratings, but he's at 15 and also a very smart guy. If you've heard him, Truist just went from 15 to 14, but again, that's 111%. Andrew Jeffrey is probably the best analyst out of this bunch. He has 111% upside on the stock. Touchdown Danny Dolev, 127% upside. Even some of these bears now, guys, like KBW, who's just, they're a FUD slinging three amigo bear, you know, he's still 14% upside on the stock because the shorts are just pushing down so aggressively. Traditional bears like JP Morgan, they still have a $10 rating on the stock. Ashvin, who is really an outstanding analyst, he's a buy at $12, 81% upside on the stock. And then you got the chipmunk Dominic Gabriel reiterating a hold, no ratings, just smirking. He just looks very, very content there. Looks like he's smelling his own fart and he's just enjoying it way, way too much. What's going on, guys? Hello, guys. Tamrio, SoFi generating cash. Yeah, the loan thing is an absolute nothing burger. You're absolutely right. I'm buying heavily today, guys. I was buying right off that 661, 662. I don't know how many shares exactly I bought. I bought it across several accounts, but thousands. So yeah, guys, I don't know what I bought today. I bought many, many thousands of shares. I just believe this has to turn around. I don't believe any of this FUD. I'm with Tim Rio. Um, it's all bullshit, guys. This FUD is just complete bullshit. It's the same people. Chia and then the bologna sandwich just rated the stock. Like he's pulling a Chia Pet. This is how much these guys are they're so transparent with this bullshit, but they still get headlines. Like if you look at this turd, the SoFi stock, okay, he rated this thing like just the other day after earnings. So he came in, what is this? He came in November 14, reiterated his sell. This is not even a week. What the is going on with? I never see analysts behave like this. He just hopped on the FUD train. The end of this guy's nose is below his upper lip. What is going on here? It's madness. Never seen a part that high in my life. Ay, ay, ay. Looks like a map of the state of Florida, this guy's forehead. Jeez Louise. Lord have mercy. Good afternoon. Yeah, you got to work hard on the streets, man. Mopar for life, drag races for a living, and it's not easy out there because of all the electric cars and hybrids, people concerned about gas mileage. Nobody wants to race him. He's got several older Priuses he won the pink slip to, but he doesn't want those vehicles. You would think, Tim Rio, but do they? That's one of the things I scribbled up on my board is like, we see the shorts going in heavily today. So is it that they're not afraid of the ER, or that they don't believe the ER is going to be, you know, is that the ER is going to be what management is saying it's going to be? I mean, I think they believe the gap net profit is coming. They just don't care, because then they're going to say, hey, the multiple, the EPS multiple is crazy. It's like 200. And then I've already seen that line of FUD. They're like, oh, the multiple is going to be 200 this year, but then it's going to be 40 next year. Then it's going to be, 15 the next year. It's like, the multiples are great. It's a growth stock. They're guiding for 34% top line growth, massive upgrades in EBITDA guidance. And this article explains masterfully, better than I ever could, why EBITDA is the appropriate metric to be judging this company by. And the things you're taking out are not cash items. This company is essentially already cash flow positive. It's already profitable. This FUD thing on like the stock twits guy, buddies, uncle's guy who ran like a 17-part FUD smokescreen on Twitter talking about how SoFi is actually losing $10 billion. I've read that a few times, and it's like a total mind screw. It doesn't make any sense. It goes in circles. He doesn't show his math. It's just a complete bunch of bullshit. And we're just seeing this bullshit flooding the market. Are they cooking the books? I mean, they're recognizing value of certain loans as if they're going to be sold off quickly, and they've been holding it's not like ideal accounting. I'm not talking about, I'm not saying so far everything's going 100% to plan. They're just selling loans off at a huge profit. Guys, the economy, the interest rates affect SoFi. It's not magic. I mean, I'm not saying SoFi doesn't show weakness, isn't subject to weakness. I'm just saying the FUD is completely overdone. The fact that they're going to be capital constrained tomorrow is just bullshit. Dan Dolev did the math. He showed all the math of what the profits are going to mean, of what the deposits mean in terms of how many more loans they can make. And the notion that they can't sell off loans is just false. Yes, they might not get the gain of sale margin that they're used to, and that might have to cause them to take a little bit of a write down here and there. But if you're talking about becoming capital constrained where they can't make really, really high quality loans, that's a trade off you have to make. You can't grow at 35% and not break a few eggs. You either have to raise money, you have to lower your lend. There's something that has to give. So they're not going to be able to. But that's another thing I want to talk about, the FUD machine, guys. Let me look over my shoulder. Fundamentally wrong assumptions or just outright dishonesty and lies. CAGR will be less than 20 over the next 5 years. They're looking 17. Bullshit. It's going to be 25, 26. Mark my words. They're not thinking about Galileo growing, and it's going to grow. Galileo's going to become more and more important every single year. Those RFPs are going to come in. It just takes time. And the revenue is going to take even longer on those because it's a long transition. SoFi just changing itself to Galileo has taken a couple of years, turds. Um, and then the other thing is that they're capital constrained in 2024. Absolutely false, guys. I'm looking for $4 billion in new deposits this quarter. How about you? What's your number? If they pull in $4 billion in new deposits, going to have absolutely no problem with capital constraints through 2024. They're getting more and more. Direct deposit increasing and increasing. The interest rates are going to remain high at least through the first half of this year. I mean, yes, if things fall apart, they might start to cut, but it's not going to be rapid. Good afternoon, Bobby Joe. Tim Rio, fast forward 2030. Yeah, I mean, short, still shorting. It'd be like a Tesla thing. I'd be like Gordon Johnson. I'd be like, this is a $10 stock. It's a busted growth story. They're never going to make cars. They're never going to make money. And so like, Gordon, they've been making money for several years now. Ah, God, what's going on? Okay. Competition's knocking at the door. Europeans are coming. I'm like, I'm not a Tesla fanboy or anything, but some of these guys, they're just like broken records. And the bologna sandwich, the Chia Pet, they never show their work. It's always macro FUD. Oh, they might have to raise money in a year and a half at unfavorable terms. Well, in a year and a half, when they have to raise money, maybe rates are way down. And SoFi is very credible. They're going to be making a gap net profit. They also have lending facilities in place. Yes, they're not as favorable in terms of the, cost of the money as if they're just getting bank deposits, but the bank deposits are only accelerating. The bank deposits fund the loans, fund the growth, fund the profits. And they're valuing the tech side at zero, guys, less than zero. Think about the math that these FUD spreading turds have to get to. I mean, if you're telling me that SoFi is worth, like, the Chia Pet and bologna sandwich, average it out, it's worth half of what it's worth today. So a market cap of like just over 3 billion. So you're talking about less than 1.5 times this year's sales with a 35% top line growth, EBITDA exploding all over your face. It just doesn't make any sense. And this is why I don't think the stock has much more room to go down. Um, Look at the options, guys. Max pain is $7. Usually these puts and calls on this graph are much further apart. You see the puts will come in, more 5, and then the calls will be out here at this is much more sensible, guys. 7. I mean, I still don't like these short-term calls, but I've looked at the options all the way to earnings. And the Bears their heart is just not in it. They might still be shorting, but I think it's because they're going to flip and go long. It's more of an accumulation strategy at this point. I don't think the returners that are still in this stock are getting stopped out or dumping. But that $7 max pain is encouraging. Of course, they came in well below max pain last week. The puts are just weak. There's not many of them. They're definitely not committed. Um, so the options are telling us the stock should go up. The stock is obviously just being shorted to hell today with 7 minutes left in the trading day. Classic mountain and hump sands the mountain, but you get this classic hump just pushing it down as hard as they can. Again, slamming us down below the support line there, but very, very slightly, guys. I mean, this is just, they're just hammering it. They're just shorting it. It's just borrowing. Nobody's dumping the stock here, guys. And volume, again, kicked up to 73 million on Thursday, back to 31 million. And today we're at a very respectable 40 million shares. The algo working extremely hard. We see the classic shallow bull pattern, but we also see some big buys and sells interspersed. So while the algo is in control of the stock, working very, very hard, it's not complete control. It's not locked down. There's other smart money coming in and out of the stock. So there's activity. There's just the right amount of volume. We want to see 40, 50 million shares. Again, we don't want to see 80, 100 million. We don't want to be down in 17, 19 million. But we need smart money coming into the stock. We need Cathie Wood making big buys. We need Fidelity making big buys. We need BlackRock making big buys. If you don't have confidence for smart money coming in at 660, I know there's some collusion. I know they're helping their shorts. I know they're helping the other trading desks, but you have to think somebody wants to buy the stock at this price given the numbers we're talking about, guys. What's up, Ukeko? What's up, FG Chi? They never show work. Yeah, they're always that lazy bastard. Alucard, Cryptic MTG. What's going on, guys? Ukeko, what's going on? So just very, very quickly, I'm going to get over through this article in the next 5 minutes. I'm going to get you out of here, get you guys off to your lunch break, get you a sandwich, get you some chicken fries, get you something stupid, maybe a fruit cup. I don't know. What are you guys in the South with that Raisin Canes? That stuff is just dry and overpriced and crappy. I'm a man who likes a chicken strip, but I don't get Raisin Canes, man. Um, I don't know, guys. It's just not very good. Chick-fil-A is so much better than Raisin Canes, and I'm not even a big Chick-fil-A fanboy. But come on, guys, get your fast food together down the South. This fast food comes over here. We got jujube chicken, all this fried chicken. It's coming in. It's dry. We got better fried chicken out here in California. You guys call yourself Southerners? Billy Jack. I don't even know if you're Southern. You got two first names? I would assume so. Grandy's has best chicken. Okay, okay. Where can I get some good chicken out here in Los Angeles? What's up, Not a Lurker? Hello and welcome, welcome, hello, hello, and welcome. I was getting worried about you. Yep, I agree with you, Pete. I agree with you. So let me run through this, guys, extremely quickly. Just it talks about how you look at EBITDA. Despite persistently strong growth, SoFi Technologies still trades closer to lows after going public. Still trading at the lows. Doesn't make any sense. The digital bank continues to report impressive growth, disconnected from the stock movement, where every quarterly beat is sold off. Remains ultra bullish, feels SoFi's trading at a massive discount. I completely agree. Big bearish thesis is that SoFi isn't GAAP profitable, but the company is a fintech with aggressive non-cash stock-based compensation expense amortization costs from acquisitions. Company just guided massive adjusted profits for 2023. Stock market has only yawned since the numbers were released October 30th. In fact, it's been sold off and shorted since then. That's the fact, Jack. Um, so guys, sorry, I got a bunch of other business I'm dealing with here today. Very busy on a Monday. SoFi beat analyst estimates by a wide margin again. Revenue beat, impressive, 22 million, 27% growth. Key was massive uptick, guide up in EBITDA, over 50 million for 2023, forecasting almost 400 million at the midpoint, up from 338, 391 to 338. Huge upgrade there. Normally a stock would soar on news that adjusted profits are now targeted 53 million higher, with especially when the target is 16% above previous estimate. SoFi is now generating 48% incremental adjusted EBITDA margins on new revenue. That's incredible. This is better than almost any other investment you can look at in any sector. The company again forecasts GAAP profit Q4. Market again is stuck on the concept of SoFi needing GAAP profits, but the company constantly highlighting this metric versus EBITDA isn't helping investor confidence. I agree, where everyone's way too focused on GAAP net profits, which is really not extremely meaningful other than to indexes and institutional investors and everyone else in the world who matters. So, I guess it does matter. It's like people saying analysts don't matter. Well, they sure as hell get a lot of headlines, and they sure as hell can move the price in the short term. Guys, market's got 2 minutes left. Not doing anything, guys. Really trading a lot of shares up to 41 million. Just had a big spike there at the end of the day. So at least the shorts and the bears are having to pay. I like to see that spike. I like to see some big buys come in, which I fully would expect those are. I don't know. We'll see. We'll have to look at the chart a little bit later. But let me just get through the rest of this article quickly. So looking at EBITDA, you can see why it's important. They're focusing on GAAP net profit, but instead they should focus on revenues doubling from 1 billion in 2021 to over 2 billion in 2023. That's the number, guys. They've doubled the fucking company in 2 years. Give me a break. And kept up margins. They're going closer to profitability. Most companies growing at that size, doubling in 2 years, are sort of throwing out the finances, going into debt. They're diluting like crazy. I mean, SoFi's diluting, but it's not that type of dilution. They're mostly stock-based compensation. And I frankly think the management team deserves the benefit of the doubt, given what they've accomplished, given the growth. The stock-based compensation is going to continue to be a smaller and smaller ratio of revenues, smaller and smaller ratio of net profits, and everything's going to be absolutely fine. So looking at EBITDA, outside the big impairment charge, the major expenses non-cash, amortization 53 million, stock-based compensation 62 million. That's 115 million. So the only real charge, actual adjusted profit, is the 9.8 million for corporate interest expense. That's the only cash coming out of that EBITDA number. The rest is just accounting. The actual adjusted profit would be 88 million, but a lot of investors assume EBITDA is excluding a lot of real charges, which it is not. It's a false assumption. It's FUD. It's bullshit. The great part about investing is that individuals can decide which metric is valid to use in valuing a stock. Investors just need to understand the adjusted EBITDA or profit metrics above are the traditional metrics used to value a growth stock like SoFi with such charges. Again, this is not some novel accounting trick cooking the books. I've been investing in growth stocks for decades. EBITDA, with all due respect to, Charlie Munger and Warren Buffett, it's a very valid metric in this case. Not in all cases, but in this case, it is. The stock has a market cap 6.5 billion. It's even less now with adjusted EBITDA target nearly 400 million for this year. It's 16.6x this year's EBITDA and 11% next year's target of 586 million. SoFi only generated 18% EBITDA margins last quarter. The goal remains to double the margins with a likely avenue revenues double in the next 3 years on 25% growth. That's where I'm at. 25% CAGR, I think, over the next 5 years, and I think it could even be higher than that. I think it could be closer to 30% when that tech side gets booming and starts landing some contracts. That'll be toward the end of those 5 years that revenue really starts coming in. The ultimate adjusted EBITDA target would be 1.4 billion in 2026, close to the original goal at the time of the SPAC deal, in which we were looking for in 2025. So 1 year behind schedule. Again, given COVID, given the pause in all the student loans, I think that's really outstanding to be 1 year behind those numbers, because everybody demonizes SPACs, says they're a scam. Well, they're actually hitting the numbers. They're actually coming pretty damn close. I think it's very, very impressive. While growth is slowing as SoFi expanded, the macroeconomic weakness lowered general loan demand. The company still forecast to maintain over 20% growth, and I think it'll be over 25. Financial services products, 50% year over year, 8.9 million versus only 1.6 million lending products category. The segment saw revenue soar 118 million, massive 142% growth, up from 49% in Q3 of last year. Financial services, again, you guys can go through all these numbers. I'd highly, highly encourage you to do so. Student loans, I think, are going to be very, very strong over the next year and including this quarter. Takeaway. The key investor takeaway is that SoFi continues to not rally due to either negativity from going public via SPAC or a major misunderstanding of the distinction between GAAP losses and adjusted EBITDA profits. An investor rarely has the opportunity to buy a growth stock with proven strong management team at this choice at this cheap of a multiple. The market disconnect won't last forever. And I completely agree with this analysis. This is exactly where I'm at. SoFi is on sale huge. It's being shorted illogically, and it has to reverse, guys. It doesn't make any sense. Free cash flows and the net profits are gonna win the day. And they can stay with it another couple of months, but I don't think they can stay with it after that. I'm with Tim Rio on that one. Excuses, woohoo, buying more SoFi. I was buying a lot today too, Mark. Love the stock. Montana Trout Fisher, me too. SoFi gets in the 5. He'll sell silver and buy more at 5. I would think that's a good idea, Billy Jack. I'm not sure. Silver's been very stable though. It's a good investment, I think. Good store of value. Bought another 1,000 today. Yeah, I probably bought 5,000 shares or something today, guys. So I am all in there. I'm committed. I've got my leaps. I've got my shares. I got my nose wide open, and I think I'm looking very, very good coming into the next ER. Guys, remember this face. It's going to haunt your dreams. Not only does the bologna sandwich have a forehead like a drive-in movie theater screen and a beak like a parakeet, but he's also a bit of a scrunch face, and I think he might have a butt chin. No, guys, he's a good guy, I'm sure. Very handsome man. You know, tall, tall, dark, and loathsome, as they say. But anyway, guys, it's a bologna sandwich. It's DannyDealz. It's un poco mas. Thank you very much for tuning in on a Monday. I really appreciate you. I try to bring you just a little bit more. Wanted to reassure you guys, the SoFi stock is in fact not selling off, but they're just shorting the bejesus out of the stock. Yet again today, shocker. I don't think they can come into this GAAP net profit earnings report with this, 125 million shares borrowed. I think it's very, very foolhardy. I think some big institutions can come in and absolutely slaughter them. But that's the bottom line, guys. When do the shorts let go? It's when bigger money, a bigger fish, forces them to let go by saying, hey, if you're going to drive the stock, which we think is worth $11, down to 660, we're going to step in and just buy all the shares and hang you out to dry. And you're going to have to cover much, much higher because there's not going to be anything available. That's how it happens, guys. You and I can't do it. We just don't have the juice. The big money has to come in and slap these guys. So will they do it? Will they not? I don't really know. Let's see what other bullshit I had written up here. Yeah, again, everyone credible is at 7 to 15. Bologna sandwich at 4, and the Chia Pets at 3. So what's their agenda? I don't know. Do shorts not believe they'll make a gap net profit, or do they just not care? Or, in my opinion, are they going to cover before that actually happens? I think that's what's going to go on. But guys, sorry, I got to run, got to get back to work. Got a lot of big dog work going on today. Appreciate you guys joining me on a Monday. It's un poco mas. It's DannyDealz. I will talk to you guys again very, very soon. You guys take care. Have a great afternoon and a great week. And remember, hang in there, guys. There's nothing wrong with your stocks. These are just reindeer games, and they always left out Rudolph, but then at the end of the day, remember, Rudolph won. Rudolph had that red nose, and remember, chicks dig dudes who drink a lot, so their noses get red. Anyway, guys, peace!